Good evening. Ira Epstein with your financial market wrap-up. And this wrap-up is for Tuesday, the 9th of August, 2022, about 7:15 p.m. Central Time. By the way, today I heard from my doctors, clean bill of health. Just got to get the stitches to heal. I was concerned, and not a problem. Whew, that's a lucky one for me. And by the way, thanks for the comments on my kitty. Each time she comes down, she follows me. She's sleeping now. I'm going to bring her on every now and then. Okay. So as we take a look at the market here, what are we? We're in a pause right now, waiting for what the world's waiting for, CPI numbers. And they're not just here. You've gotten them in Japan. You're going to get them in Europe, coming to America. What is inflation doing? Now, there's a couple of things that I always look at on inflation. First, you get your headline number, and then you get the core number. The Fed likes to look at the core number. You know, if you strip out food and energy, interesting set of events. Are you embedding? Are you just locking it in? I personally think you got real sticky inflation. Do you remember when COVID was there? I was saying, nah, it's not sticky. I admit that. It's sticky now. People never talk about they were wrong on the transition. It starts with me. I was wrong on it. I thought it was COVID, and then, boy, all the helicopter money from COVID locked inflation in. I think that's what we're dealing with. All that easy money. People are going on spending sprees. A lot of people didn't deserve that money. They got it anyways. So where does it take us with the market? Well, tomorrow's one of the legs. It tells us if the Fed goes from maybe the thinking of a 75 or a 50 basis point hike to a 75 or a 100 basis point hike. I promise you a really hot number is going to give the Fed reason to just go to the 100. The market consensus, the headline around 8.7, 8.8. So anything under 8.5 to 8.7, let's call it to 9, neutral. Over 9, hot as can be. Under 8.5, the Fed will say, nah, maybe we go back to the 50. It's taking care of itself right now. That's how I'm viewing it. When you look at the S&P, the battleground's right here against the 18-week moving average of closes. You can see how the market is just sitting right now, not doing an awful lot one way or the other. You've got the pattern of higher highs, higher lows. The market is sitting here riding. The word is riding. The 100-day moving average, if it breaks from here, probably going to the 4,049 level, back to the neutral zone, the 18-day average. 18-day average is what I call the line in the sand. Markets get comfortable at that number. Get a number that's low, and it looks like the Fed's going to back off. This market takes off. Why not go back to the upper Bollinger Band? Get a hot number. Why not come back here? Because the Fed's going to get aggressive. I don't like this. Now, I don't like to get the word called stochasticitis, but any reading under 79, you've lost your embedded reading on a closing basis. This is a warning sign. It might be a very good idea to get out of these markets tonight, take a fresh look tomorrow, because if the market's negative here, you're going to be fully embedded. You'll be down, in my opinion, from here another 60 points before you know what's going on. NASDAQ losing its embedded reading. I think it's time to cash in tonight a big part of what you've got. Let's assume you decide you're going to go through. That's up to you. Maybe you don't stay down like you are. It's only 7:15. You've been open 2 hours. Maybe it flips back up there, but it's a warning sign that it's not going to. Same in the Dow. It wants to join the party with it too. I'm getting too many signals that are saying, hey, if you're not an up day tomorrow, you're down, and this rally has come to an end where you're at least going to the 18-day average of closes. I'm sticking my neck out. Same in the Russell, which should mean that the VIX is going to go back to the 18-day average. It'll rally, stocks break. Be careful. I don't think you want to go through the report. Then we get to the bond market. What's it going to do? Well, it's not going to be in the 30-year, the real one that does it. It'll be the 10. And the 10 is saying, baby, I want to go down to the 100-day average. Momentum still down, trend down, bias down. So you'd have to get back over this number right through there. Let's see if I can bring this to us. Yes, I can. And that number is 120.05. Got it? So that, I'm going to come back to the chart here. So I thought I could. There we are. Yes. Okay, so that is the number I am concerned with. If you got back over that, barring that on your way to the downside. In the dollar index, here's the resistance. If you can clear 106.81, you're probably going to go to the upper Bollinger Band, but I'm not looking for it to just break out of this and run. Doesn't look to me like it's ready to do that yet. Momentum is flat. Euro. If the dollar goes up, euro goes down, but you got to prove to me 101.70, and you're so close then to the lower Bollinger Band, 101.64. It's hard to make a trade out of this. British pound, I think if the pound can start down underneath, and I'll show you what I am looking at right here, this day. I think that if you get under 120.57, you start with a bearish set of situation. I hit the wrong keys. I'm learning again. But you're not there yet. You're neutral. Get under that, and I think you're going to be here. What's holding the pound up? Liz Truss, I think that's her name, and she'll be the next PM the way the polls are going, and she's very, very progressive in terms of tax cuts and giving people the benefits to help support the pound at this point in time. So that's what I think is actually going on there. Bitcoin, do you get more neutral than this? Stuck in tight Bollinger Bands? Nothing there. Crude, we might be dropping back to the differential of the 18-week a day moving average at the 648 level. You're only 14 cents. That would be the support zone. In terms of crude, you haven't yet lifted where you can say this market has bottomed. What you have done is you can argue a trading bottom against the Bollinger Band is in, but not a trend bottom. You're not there. You're caught between the upper and lower bands here, and you're caught between the upper and lower bands here with the same thing that's occurred. Very difficult to make a call here. Rebob gasoline, I think you made your trade bottom, but you never hit the Bollinger Band. Instead, it became the 100-day average to the 18 down there. Momentum turning to the upside. So there's a lot to take in right here, and natural gas would be one of them, where the market's fallen back from a heated market. You like that with the hot weather they had in Texas and other parts in the East Coast, but it's abating, pulling back. Not the case in Europe, by the way. If we could export this stuff, I think up here, really, I think you'd have tremendous demand right now. And Putin is playing his game. He cut off another pipeline saying payments didn't make it to him. Of course, you can't pay in a certain way by the transit company there. So he said, let's cut it off. But remember, they were sent to turbines. He didn't take them at first, delayed everything. Now, what he's trying to do is say, well, this is another thing. The game he's playing is go to winter. He beat the Nazis, not him, but you understand, Russia beat with weather. Russia's going to beat again, in my opinion, or try to. That's their game. Europe into, hey, let's get these sanctions, let's sit back and talk, whatever, as he continues with his war. I think he's making a mistake. I think that you're going to see Europe just like they did in World War II. I know it's hard to believe. They're going to hunker in. They'll close some factories, they'll do whatever, but none of this is bullish. This all hurts their economy. Be careful. That's my point with all this. And what do I look at? You watch how I trade with these Bollinger Bands, or tell you to trade with them, might be the better grammar. Do you know how to work with them? I've made this so easy. I've got a video course that you walk out of and you go, my God, I learned something new for spiders, ETFs, stocks. Here, take a look at this and learn a little.